Hi, mining community. Welcome back to another episode of the Dig Deep the Mining podcast. And today's guest is Sam Pazuki, who is the Vice President, Corporate Development and Investor Relations at Oceana Gold. For those that don't know who Oceana Gold is, they're a multinational gold producer with operating, development and exploration experience in the Philippines, New Zealand and the US. Wanted to get Sam on the podcast. What we're going to talk about is some of the M&A activities that are happening in the gold space, and some of the challenges around ESG, and especially obviously within the current climate that we're in at the moment. So let's get straight into this, and I want to welcome Sam to the podcast. How you doing, Sam?
Yeah, not too bad, Rob. How are you doing?
Yeah, not too bad. Appreciate you taking your time to conduct this. So, as we always start off, just wondered if you can give the audience a little bit of background about yourself, from when you say graduated to your current role where you are now, and then I've got some questions I want to ask you around ESG and M&A.
Sounds great, Rob. It's a pleasure to be here. I appreciate the invitation to be able to talk about what I think are some pretty exciting things that are happening in the sector, and actually even more broadly in the investment community. We have seen a lot of different M&A transactions, and ESG is very topical as well. So it's a pleasure to be here to speak specifically on how that sort of translates in the mining industry. In terms of my background, I graduated with an engineering degree from a school about an hour away from Toronto called McMaster University. I went into the oil and gas industry straight out of university and worked for I guess basically the largest pipeline company, at least in North America, called Enbridge, in various roles with them, including business development. As part of a small team, we were mandated with growing a renewable energy business for Enbridge, which was brand new. Their bread and butter is oil pipelines and gas distribution, and they were looking to expand their portfolio, add a third leg to the stool in renewable energy. And so we were pretty active, especially during the global financial crisis, in acquiring different wind and solar assets, looking at different technologies, including carbon capture, sequestration. So it was part of all that for Enbridge. I left shortly thereafter, after we made a few deals. I think in the time that I was there, Enbridge had done a couple $1 billion of transactions. Today, I think that number has grown to $7 or $8 billion of transactions. So certainly a meaningful part of their business. From there, I moved on to consulting, working in the advisory practice with Ernst & Young, mainly focused on oil and gas and mining companies. So that was sort of my first exposure to the mining industry, is helping a number of different mining companies on different projects that they had, whether it was corporate development related, transactional related, or project management. And my largest client was BHP, helped set up the Jansen project for them, the big potash project in Saskatoon. As a Canadian, I almost screwed up the pronunciation of that. So that was an interesting project, and still ongoing, obviously, today. Potash not doing so well, but the project is certainly robust. From there, I joined Oceana Gold, was hired to be their lone employee in Canada, and happy or maybe unhappy to say that I'm still the only employee here in Canada in the corporate development investor relations function. And Oceana Gold's a mid-tier company. It was a lot smaller than what it is today. So we've certainly grown the company in the last 8 years. We have emerged as one of the premier intermediate gold companies in the space, producing anywhere between 500, 600,000 ounces of gold with 4 operations. So it's been an exciting 8 years at Oceana, and we certainly have a very bright future as well.
Yeah, certainly. How's the industry? I mean, obviously you started off in oil and gas and you moved over to mining. How was that transition, and what are the major differences? And obviously over your career, obviously those advances have gone on, but what are the main differences do you see coming from the oil and gas into the mining industry?
Yeah, I've got to be careful what I say here because
Yeah.
I can offend people on both sides of the different
Yeah.
industries. In fact, when I was hired to join Oceana, the CEO at the time had asked me a similar question, and I responded by saying that it's to me it seems like it's the same industry. To which I almost was not the successful candidate for the role.
Yeah.
Um, I mean, I've learned quite a bit in the mining industry, but I do believe they're similar. I mean, it's resource extraction. You've got a resource in the ground and you're digging it up. In oil and gas, I guess there would be less sunk costs because the drilling you do, you almost know immediately if you have something. You do need to do a bit more testing and drilling to see what sort of economic reservoir you do have, whether it's oil or gas. With mining, and this is, I'm a patient person, but this is the frustrating thing about metallic mining, is that you have to drill for 5 to 10 years, and maybe you might have something that's economic. There's no assurances around that either, but you've spent a lot of money and you've spent a lot of time and effort to see whether or not you have a resource that's economic. After you've gotten through that sort of initial phase, I mean, there's some of the risks are still there in terms of technical risks, social risks. We're not finding major gold deposits, in our backyard. For me here in Toronto or in major centers, you're finding them in places that are socially complex for the most part, and a lot of the easy deposits have already been discovered. And are in the process of being mined or have been mined. So some of the behemoth deposits in Nevada have been discovered, and it's a good jurisdiction to be in, and it's not that complex from a social perspective. So oil and gas have the same challenges from a social perspective. And one of the things that we're going to be discussing is around ESG, which does apply to both of our industries as well.
Yep.
So there are a lot of similarities. Yes, there are some technical nuances that are, again, different between the two sectors. But I think we're sort of in the same family of industries.
Yeah. I'm going to ask one more question around this. What can the mining industry learn from the oil and gas industry? Is there anything, I suppose, glaring that you think they could that can be improved?
Yeah, no, that's a great question, Rob. One of my first observations when I came into the mining industry was I found that the mining companies sort of promoted themselves on an individual basis as opposed to a sector basis. Whereas in oil and gas, there's different groups that are quite vocal. Companies are represented through those groups. For example, in Canada, you have the Canadian Association of Petroleum Producers, CAP, and they promoted the oil industry. They defended the oil sands. I believe they continued to do that, as well as the pipelines, and they represented the interests of the industry. And it wasn't just individual companies trying to all do the same things. I mean, that's still required. I mean, companies are still required to promote themselves and promote their industry with their stakeholders. But you do need one sort of overarching body to represent the entire industry. The mining industry hasn't really had the same sort of penetration or the same association. There are some groups that are becoming more popular as the mining industry companies are learning that we can be stronger together than working in our silos. So in the gold industry, for example, the World Gold Council is emerging as a pretty dominant voice for the sector. The member companies, of which Oceana Gold is one, is promoting the industry. We're not being shy about all the good things that we are doing. It is a risky business. We do have an impact to the environment, but we as a industry are creating a lot of benefits for a lot of poor countries, poor jurisdictions, for all jurisdictions, creating jobs. And at the same time, we're managing our risks associated with the environment and also the social risks. And so we're doing these things every single day, and that's why we're in business. And now we've got a group that can actually be out there and promote the good things the industry is doing.
Yeah. I just want to make one note that I have interviewed someone from the World Gold Council. So I'm not sure what episode that is, but if the audience wants to find out more about what the World Gold Council does and their function, and what they're looking to achieve, then do scroll through the episodes of the podcast, because I have got an interview with one of the senior guys at the World Gold Council. So going on to the questions now. After a few years of sort of limited M&A activities in the gold sector, we're sort of seeing a flurry of M&A activity over the past sort of 6 months. What do you say is the driving the increased M&A activity at the moment? What kind of things do you see the reason behind that?
Yeah, so another great question, Rob. I mean, when I joined the industry, the gold mining industry specifically in 2012, there had been a flurry of M&A deals. It seemed like transactions were happening quite frequently, almost sort of in a left, right, and center situation. But as the gold price came off, or fell off a cliff rather, in 2013, we did see M&A transactions really dry up. We also did see that a lot of the gold companies were taking major write-downs on some of the transactions that they did make prior to the fall in the gold price. And so they got into a situation where they were basically in a penalty box. Shareholders were frustrated with the major write-downs, and it started at the very top with some of the major gold companies. And so we sort of stayed in this situation where we were uncertain where the gold price was going. A lot of smaller companies that had made discoveries and advanced them along in a higher gold price were no longer economic. So they were no longer worth investing in or acquiring. So, the biggest driver was that shareholders just did not want to see any M&A. They wanted companies to focus on their balance sheets. There were stressed balance sheets because of the debt that was taken on board by a lot of these companies. And so we went through this lull period, and as the gold price has been creeping back up, we've seen an increase again in the number of M&A deals, particularly in the last year or so. I mean, there's been a flurry of deals in the last year. And I attribute it mainly to balance sheets being fixed, shareholders being more amenable to doing deals, and the fact that there's way too many gold companies to begin with. So consolidation, which has been talked about for years, as long as I've been in the industry, is something that's been required, and it's just only happening now. A lot of the I guess money that's been going into the gold industry from an investment perspective, from investors, has been into larger index type of products, or ETFs. In those cases, size matters. So some of the transactions that we've seen in the last, I'd say 6 to 8 months, there aren't, from my vantage point, there aren't a lot of synergies other than scale. So the companies are getting together to become a much larger company, which would then put them on different or new index funds, and also attract investors that have market cap thresholds. So as you get bigger, then you attract a larger pool of investors who won't invest below a certain market cap. So as these companies have gotten bigger, more money has flowed into them. With the gold industry becoming more attractive to investors, I mean, the gold price is above $1,700. There's been a lot of economic stimulus in the last couple of months, in the short period of time. I mean, it's unprecedented how much money that's been printed globally and in the US. So that's all positive for gold. And you're finding that generalist investors who, up until more recently, have stayed away from the gold industry are coming back into it. And where they go into first is the large cap gold stocks. Yeah. So there is that benefit in terms of being larger, and that's why I think that's one of the motivators for some of these transactions. But I'm not sure if that's sort of the right thing to do over long term.
Yeah. Obviously, you mentioned about the economy, and a lot of the governments around the world are stimulating the economy by printing more and more money. And how long that's going to continue, we don't know, but I'd say it will be continuing for a while. Will that have a big effect on more and further M&A activity? Because obviously more money is going to become readily available, and will it then go into sort of gold because it is seen as I suppose a value of currency, or value of money?
Yeah, I do believe that we should expect to see continued M&A activities in the sector. With the increase in the number of funds that are going into the gold industry, or the amount of capital going into the industry, that does help a lot of the junior gold companies out. It's been fairly dry for them for the last several years, and it's still fairly quiet for them right now. I mean, they need to raise capital to continue exploration programs. And in the last 2 years, you've seen corporates, including ourselves, be the lenders to these junior gold companies. If you look back, people, some of the experts in the industry, I know Goldcorp who was acquired by Newmont, was quite vocal about this, and that we had seen peak gold in 2012, I believe, was when they said we were there. So you've seen a reduction in the amount of drilling that's gone on to find more gold deposits. Now that the industry is sort of back in favor, and there's an increased flow of funds, then that money can go into exploration. It can go into juniors that can go and drill and discover new ore bodies. And eventually these companies are going to be acquired. So in the near term, from that perspective, you won't see a lot of M&A activities. But for the reasons that I mentioned before, in terms of just having scale, you'll probably see some more consolidation in the industry. MOEs, we've seen one just recently with SSR Mining and Alacer. Those are very difficult to do, but those are necessary for our industry. Again, there's too many gold companies out there, and I think where it makes sense, MOEs is something that I know shareholders would welcome.
Yeah, and speaking obviously about Oceana Gold, do you see yourselves as sort of participating in more M&A activity?
Yeah, so Oceana.
And I was going to say, and is there a particular focus as to what you would look at, whether it's a certain jurisdiction, particular types of companies as well?
Yes, Oceana Gold has basically been formed through M&A. We had a project that we were building when I joined in the Philippines called the Dipio, which generated a lot of cash, still within our portfolio. So then in 2015, when gold hit its lowest point, and as I mentioned before, our peers in the industry were told by the shareholders no more M&A, or they had distressed balance sheets, they were hiding underneath their desks. We were actually quite acquisitive. So we did 2 major transactions in 2015, which one was Remarco, which brought the Hale gold mine into our portfolio. That's the one in South Carolina. And we bought the Waihi gold mine from Newmont. Majors were selling assets at the time to pay down some debt and repair some distressed balance sheets. So we acquired that from Newmont, and we've created significant value for shareholders through that acquisition. That period basically created a bunch of new gold companies, including Northern Star and Evolution. So the Australians really benefited from asset sales in Australia. And again, we benefited from that as well. So as we sort of went from that low point in the gold industry to a rising one in 2016, we were focused more on building Hale at that time. So we bought a project that we completed the build, put that into operation in 2017. And through the deals that we did, not only brought good assets into the portfolio, but gave us some very strong exploration ground. So where our focus has been on exploration. And so we've drilled extensively to prove up and build out and expand resources in New Zealand, in South Carolina, to optimize the projects we have and expand them from where they were. So our focus has been organic growth in the last few years. We have looked at doing MOEs as well. We do consider ourselves to be shareholder friendly. We make decisions for the long term. We want to create value for shareholders, manage the things that are in our control. But MOEs are very difficult to do, as I mentioned. It's difficult to get 2 different companies, with egos involved and social differences and cultural differences. It's very difficult to do, but we are certainly open to doing MOEs.
Yeah.
So today, we would consider that, but we're more focused on internal in terms of advancing our organic growth projects than looking external for opportunities. And in a higher gold price, Rob, everything becomes expensive. So
Yeah.
we prefer to buy low
Mm.
and then sell high.
Yeah, yeah, certainly. Despite the emergence of COVID-19 and increased volatility in the stock market, obviously ESG remains prevalent in the investment community. From your experience, do you see investors placing greater importance on ESG performance when evaluating sort of investment opportunities?
Yeah, so ESG has been the buzzword for the last year, 2 years or so. We've heard a
Yeah.
lot about ESG, and you know, I thought with COVID you might see a reduction in how much people sort of emphasize ESG, but it remains as strong as it was 6 months ago or before the COVID crisis hit the world. ESG has been around for years, though. I sat on a panel last year in London Minds and Money, and I commented to the audience that, in the last few years, we hear about ESG, but it's nothing new.
Yeah.
It used to be called different things before. It was corporate social responsibility years ago.
Yeah.
And then people started dubbing it sustainability. And now we're calling it ESG. And I think part of that is that we're getting a better understanding of what CSR and sustainability really are. What are the key drivers for that sort of area of the world with respect to companies? What is it? What's the focus on environment, on social? It's on governance. So for our industry, it's very important. And Oceana has been in business for 30 years because we do ESG the right way. As a resource extraction company, whether it's in mining or oil and gas, if you're not doing ESG well, you're not operating a sustainable business. So we do that regardless of what people are saying external in terms of whether it's investors or NGOs who talk about ESG, we're doing it regardless. Where it's important for us and investors is we want to make sure that the good stuff that we're doing on the ground is being translated to what investors want to see in their investments. So we identified that there is this emergence of ESG, particularly with the increase in the amount of social media we see. We thought that this would only get bigger and bigger, and frankly, we've been right, and I think it's going to get bigger from here. Investors are adding this additional layer of screening, ESG screening, when they're evaluating their investment opportunities. Sovereign wealth funds and some of the major investors like BlackRock, for example, they've started to blacklist industries. They've come out with certain sectors that they won't invest in. And for the ones that they are investing in, they're placing a pretty big standard to make sure that their investments are performing well from an E, S, and G perspective. So I don't see this disappear. I only see this getting bigger. And then you've got third-party service providers, basically the rating agencies, that are another group of research analysts that we have to engage in as an industry. Again, to make sure we've got proper disclosure, we've got policies and procedures and programs that align with what our stakeholders are demanding from us, and making sure that this is we're not perfect. This is a journey, and making sure that we have a plan in place to continue to get better.
And how do you see ESG evolving over the next few years, and how is Oceana Gold approaching ESG?
Yeah, no, another great question, Rob. I mean, the investment community, they've added this additional ESG screening, and I engage quite frequently with investors, our largest investors, including BlackRock, on how they are viewing ESG. What are they looking for from us specifically, or from the industry? And I think they're also trying to figure out, how does ESG translate into being an investment opportunity? It's very easy to, it's not easy, but it's understood that to make an investment decision, you're looking at the financial performance of a company, what it's doing today and where it's going to go tomorrow, to make sure that it's a financially sound business that you're investing in. ESG, I think a lot of investors have struggled in terms of translating how that performance then impacts the bottom line, what sort of metrics they need to put in place to make sure there's a good balance with investing in companies that have strong financial performance with companies that have strong ESG performance. So I'd say that as this sort of evolves, I think the methodologies will start to improve. I think investors I know are working on these methodologies, so I think we'll find some better ways or easier ways for investors to be able to make that decision.
Yeah.
I've spoken to a number of pension funds in Canada and abroad where they're relying on third-party rating agencies like the MSCI, for example, and they've told me at some point they believe that they will set a threshold in terms of MSCI rating or another third-party rating, and if their investments are below that threshold, then they won't invest in them. And so for the gold industry, I've heard, using MSCI as a standard, I heard that some of these pension funds are looking to set a pretty high bar, with a B plus rating. That only gives you a handful of gold companies to invest in, including Oceana. So for us, we are one of only a few gold companies that have an A rating with the MSCI. We're actually top 5 in some other rating agencies as well, like Sustainalytics and Vigeo. So we've been at it for a number of years in terms of translating the good work we're doing on the ground with the work, basically with what the rating agencies and the investors want to see from us. So that strategy continues to evolve as the industry evolves. So a lot of it has to do with being very transparent with our stakeholders. It's being engaged with our investors, speaking to them on a regular basis, engaging with these third-party rating agencies like MSCI and Sustainalytics, etc., and being an active voice in the different industry groups that we talked about earlier. So the World Gold Council, which you mentioned, they launched the Responsible Gold Mining Principles last year. So the member companies have agreed to implement these principles over the next 2 or 3 years. We are already doing a lot of what these principles require of us. And in fact, we're actually the chair of the World Gold Council ESG Task Force. So that gives us an opportunity to really lead what we believe is very important for our industry.
Yeah. And with ESG, do you think companies, and I suppose talking about gold companies, are they just slow to react to enforcing more ESG policies, or are they just not getting it? Is it, and obviously if the rating agencies are getting more involved, surely the standards will raise and they would obviously have to adapt quicker. Just wonder if you can comment around that from what you see.
Yeah, I mean, I think our industry was a little bit slow to see this. I've referred to it as a tsunami.
Yep.
I think they've been slow to react to it. Again, I think the industry, a lot of our peer companies do a very good job when it comes to E&S in particular. And the area that everybody has needed to sort of lift their game on has been how we disclose the good work we're doing, and doing it together as an industry and not as individual companies. So I think I'm not sure if it was denial. I think it was more just sort of playing catch up. And what does this really mean? Is this for real? I've heard this before. Do we need to change anything? Let's kind of wait and see. And then again, it's become the buzzword in the last 2 years, and I feel that the industry is just playing catch up now.
Yeah.
We've had an ESG strategy for 5-6 years, which is why we're only one of, I think, 4 gold companies that has an A rating.
So I suppose companies weren't necessarily focusing on it, but you'll probably see it will be a necessity to focus on this to obviously improve standards, improve your rating, which obviously can affect a number of other things.
Absolutely. I mean, I believe in our sector. I believe our sector does a lot of good, but we're not portrayed that way by social media or the media. We're portrayed as climate deniers and climate criminals, as I was called as I was walking into the dinner gala at the Mines and Money event last year by the protesters.
Yeah.
And that's the perception. A lot of people are just not doing their own homework to realize that the industry is doing a lot of good things. The luxuries we have in this world is because of mining.
Yeah, yeah,
To be able to even do this podcast is a result of the mining that's taken place.
yeah,
And mining is an essential industry. It's an essential business.
yeah,
I think our industry, and this sort of goes back to your first question, I think the industry, we've been ashamed to promote the good things that we're doing, the jobs we've created. We have kept quiet about all these things. And I think we absolutely need to promote what we do, because what we
yeah.
do.
Yeah, and do you think they've withheld from promoting the industry because of? I mean, I was in Melbourne for the conference where there was obviously a lot of protesters outside. So, do you think mining companies and like the larger mining companies, you said they've been holding back? Do you think they're obviously doing that on purpose because they don't want to draw that attention, even though that attention is there, obviously, as we see at some of the conferences? So do you feel that they need to sort of just not bypass them, but need to increase that awareness? Because obviously I believe mining has got a brand image issue, and from obviously what you're saying, we're not showcasing what mining is really about, and it's not everything that is portrayed in the media. So do you think what mining companies should do is really push forward with promoting the industry I say at all costs, but so it gets the message across?
Yeah, absolutely. Absolutely. I think the concern individual companies have is if they sort of have the louder voice, they'll get the attention of these groups, these anti-mining groups. And that's what they are. They're anti-mining. They're not for anything else other than to stop resource extraction.
And you're not going to please them no matter what you do,
That's right.
unless mining just goes, which is never going to go.
Yeah, absolutely, absolutely. They want to put us back into the dark ages, but still maintain their cell phones and travel around.
Yeah.
And it's unfortunate, right? I mean, they're not accountable to anything they say, which is why there's a lot of misinformation on the industry, which is why they're using images of some of the bad players and painting everybody with that same brush. And this is why it's so important for us as an industry to promote the good things that we're doing. Let's balance the misinformation with facts. Let's get that out there. Let's promote what we're doing as an industry. The issue with individual companies doing that is we will draw the ire of some of these groups. And this is why I believe that we need to do this as an industry. We need a voice of, whether it's the World Gold Council or ICMM or whatever groups that are out there, have them promote the industry as opposed to us sticking our necks out for our individual companies.
Yeah.
We, frankly, Oceana, for example, we don't have the budgets to launch the sort of social media campaign that the other sides do. We don't nearly have as many followers as they do. So that's why it's important as an industry we do it together, and not be shy, not hold back on the good things we're doing.
Yeah. Do you think a separate body needs to be formed where there will be a core group of people, really, and whether that comes from people from industry, from a mining company, maybe a representative from a certain amount of mining companies out there, and have a group where their main focus is to improve the image and branding of the mining industry, and then pull in some guys, say from the Gold Council, as experts in that particular field. But do you think they should have a core set of people whose main objective is to promote and brand mining, obviously in a positive way, and educate the world that this is an industry that is here to stay? It's been around for years, and it just needs to be conveyed to the world, because a lot of people, I would say the majority of people that are outside of mining, don't actually understand what mining is about.
Yeah, no, I do believe that we need to have that type of organization. I think they exist. I just think they need to maybe expand their scope to add that layer of promotion for the industry. Again, we're not a perfect industry.
Mm.
There's lots of improvements that we need to make as an industry, as individual companies. And it's, part of disclosure is to be able to recognize where the limitations are. We do these things well, but these are the areas we need to do better in. Tailing storage facility, for example, it became a big issue when there was the two major incidents in Brazil.
Yep.
And a lot of investors were blown away with what happened, and concerned that a lot of the mining companies or mining industry, oil and gas industry, have these large tailing storage facilities, and wanted to make sure that we were managing our risks. I know the Church of England was very active in trying to get the ICMM and some of its members, as well as other mining companies, including ourselves, to respond to a questionnaire of theirs. And we were happy to do that, and the industry was happy to do that. So I believe groups like the ICMM exist. I think we can expand their scope to be able to promote what we do as an industry, and again, discuss some of the limitations. The World Gold Council is a good body for the gold industry, and maybe there's a partnership there with the ICMM. But yeah, absolutely, we can do this together.
Yeah. Obviously, we've been speaking about, and obviously during the time of this recording, we're in the pandemic and COVID-19, and we all know what's happening economically during obviously the whole globe and the impacts that this is having. How is this impacting the mining industry from your perspective, and also in relation to Oceana Gold?
Yeah, I mean, it's impacted all of us. No one's spared from what's happened with this COVID crisis. We're talking how we're both in lockdown and have been in lockdown for the past 2 months. But there's different, like the situations in different jurisdictions. I mean, there's differences there. So you being in the UK, me being in Canada, there's differences in our respective jurisdictions. But mining hasn't been spared. Mining has been impacted as well. Here in Canada, depending on which province you're in, they have had different protocols. In Quebec, the mining industry had to shut down for, I think it was at least 2 weeks. It was deemed non-essential and had to shut down. In my province here in Ontario, it was deemed essential and allowed to operate with some restrictions. In the US, where we have one mining operation in South Carolina, each state had a different situation in terms of numbers and cases and testing and protocols. We immediately put in some very strict protocols at our Hale gold mine in South Carolina. The number of cases was increasing around us, but we didn't have, and we still don't have any positive cases of COVID, but we still, even to this day, continue to operate with some restrictions.
Yep.
So for that operation, from that perspective, there's been some impact in terms of how you get onto site and how you leave the site, plus all the other social distancing and disinfecting that we're doing. We have 2 mines in New Zealand, and New Zealand was probably one of the first countries to implement some draconian measures, which has paid off. So they took some very drastic measures right at the beginning. They shut almost everything down for 5 weeks. Mining was deemed non-essential, but we got an exemption for our McRae's mine, so where we could operate on a limited basis for technical reasons. And then we were building a project at Waihi, which we had to shut down. So New Zealand, with those measures that they put in place, after the 5 weeks, they went from a level 4 down to a level 3, where they allowed some businesses to open up. And then just on the weekend, they dropped it down to, I think, level 1. Which basically is life as usual because they have 0 cases. Australia's, they've contained it as well too. Both countries have closed their borders, and so the mining operations haven't been impacted in Australia. But then coming back to sort of this hemisphere, South America has had a number of issues still with the spread of the virus, which has impacted mining operations in Brazil and Peru and in Chile. Mexico deemed mining non-essential, and it shut down for a month. I believe some of those mining companies have, they've lifted some of those restrictions, and those operations are returning. And then there's other operations, even in the US, that have had to shut down and are still shut down. So mining hasn't been spared. The supply of commodities has been impacted because of these shutdowns. Copper was making a good run up until today, with supply concerns and the fact that China is looking to, basically it was coming out of its COVID crisis and looking to build again. So the demand for copper was going up, and I believe it's still going up. And then the supply chain was something that we were being asked quite frequently by investors. What sort of disruptions were we facing with supply chains? So I don't think any mining company can say that there were no issues from that perspective. I think for us, Oceana specifically, we have a pretty good supply chain in place, and we've got a good stock of materials and equipment. So it hasn't really impacted us. And we proactively manage that. But certainly a lot of mining companies were impacted with supplies that were coming out of China, or even in the US, when it was dependent on other industries that were shut down because the states had put in stay-at-home orders.
And following on from that, I've been dealing with a lot of companies and operations in Africa, and it seemed to me they were affected, but a lot of them had managed that and continuing to work and continuing to operate. Funny enough, I spoke to someone from South Africa today, and it was interesting what he said. He said they've only just recently gone back to site, and only 50% of the workforce is going back. Anyone over either 55 or 56 isn't allowed to go back at this particular time. So they've put a restriction on age because of that higher vulnerability of someone at that age and older, which is interesting, which I haven't heard anyone say before. So that was interesting to hear that.
Yeah, we've had something similar as well.
Okay.
So when New Zealand had reduced their alert level from 4 to 3, we were allowed to resume full operations at McRae's, but anyone who was deemed high risk, so whether they were in that age group or they had some sort of underlying health problems, would still have to stay at home and be isolated. So again, those restrictions have all been lifted because New Zealand has no cases. But you're right. I mean, there's a number of operations where they have those types of restrictions in place.
Do you believe there are additional risks and conservatively opportunities for the sector and for Oceana Gold specifically?
Yeah, I mean, we keep hearing on the news about second waves. So I mean, I think that's still a risk that, COVID hasn't gone anywhere. I believe, there's a lot of countries, dozens of countries, dozens of companies working on a vaccine. And I think until there's a vaccine, the threat of a second wave still exists. So that is obviously something that we can't ignore. We need to make sure that we maintain the strict protocols we have in place to ensure there's no spread of infection or any infection. I mean, the health and safety of our workforce is paramount, and we need to make sure every single person is healthy and well. So we'll continue to have those protocols in place, and I believe the mining industry will as well. Again, to make sure there's no second or third wave, and we'll see where things are at with respect to the vaccine. But it does, conversely, it does create opportunities as well. I mean, countries that are dependent on industries like tourism, like New Zealand, like the Philippines, need to look at other industries to kickstart their economies. And that's exactly what those two countries are doing, which directly tie into to us. In New Zealand, its major industry is tourism, and the borders are still closed, even though they've lifted the restrictions they had in country. The borders are still shut, and who knows how long it'll take before we get back to normal, if we ever get back to normal. But the tourism industry is going to take probably, in my opinion, 2 to 3 years to get back to where it was. So for countries like New Zealand that are so heavily dependent on that sector, they need to look at other sectors. And they've talked about that. They've looked at other industries. They want to know which industries or which sectors they need to sort of support to kickstart the economy. And they've identified construction and mining as two sectors where they can look at streamlining permitting processes to be able to put them into operation sooner and, again, be a source of revenue. Philippines, same thing. Its biggest percentage of GDP is overseas remittances, and the border is still shut there. And it is a major part of their GDP, and the president recognizes that they need to do something to make up for that shortfall. So they've created this task force, an economic task force, led by the finance secretary, who's a former mining executive, to look at, okay, how are we going to kickstart the economy? And mining, we believe, has been identified as one of those sectors that can help them out. So, I mean, these are just two examples. I believe that countries around the world will be looking to different industries that can help kickstart their economies.
I want to slowly wrap this up now. I've got a couple more questions. What's the future for Oceana Gold, and I suppose looking over the next maybe 3 to 5 years as a maximum?
Yeah, so as I mentioned, we've got a pretty robust organic growth pipeline with the 4 operations. Our company will produce between 500 to 600,000 ounces of gold plus copper. With the organic growth opportunities that we do have, so particularly at Waihi, which is the asset we bought from Newmont, we've talked about something called the Waihi District Study, which we're in the final stages of completing, which will daylight the opportunity that exists there. So Waihi has traditionally been around 125,000 ounce a year producer. We're looking at taking that asset to about 200,000 ounces a year production, and extending the mine life well into the mid-2030s and beyond. We bought this asset in 2015, and it had a 3-year mine life. And we added to that, and now we've got a mine life out to 2030. And now through the study, we're looking at expanding it even further. So that, not only will we get the production growth, we get the mine life growth and the margin growth just from Waihi. Yeah. In the US and South Carolina at Hale, we have an expansion project there. And at our McRae's operation back in New Zealand, we're also looking to extend the mine life. So for us, it's going from being a 500 to 600,000 ounce a year producer to being somewhere over 700,000 ounces a year, with mine lives at each of the operations at 10 plus years. So for us, that's why we focus on organic growth. We don't need to look at what else is out there. We can grow our business internally, and that's the best way to create long-term value for shareholders.
Yeah, certainly. One last question. What does mining mean to you?
Yeah, it's sort of what we talked about earlier. It is enabling the things we want to do as a society. It's to allow for the things that we need, the essentials for, dishwashers and washing machines and vehicles, internet, all these things that mining has contributed to. It's to allow for these things to continue. It's to allow for technologies to advance. I grew up through some of the shuttle launches in the 80s into the 90s, but I was still blown away by that rocket launch a couple of weeks ago or last week.
Yeah.
And these aren't possible without mining. So the advancement of our planet, of our race, we're looking to invest in new technologies like battery-powered vehicles, renewable energy. All that requires mining. It requires us extracting minerals from the ground and processing or refining it into the products we use today and the products we'll be using tomorrow. Yeah. So it's a critical part of society, and it's something that I'm proud of being a part of.
Okay, Sam, really appreciate your time in doing this podcast. If our audience wants to reach out to you, obviously we've spoken a lot about M&A and ESG. If the audience wants to reach out to you and ask any questions, how can they go about doing that? And are you on any social media channels?
Yeah, so Oceana's got social media. We've got a Facebook account and Twitter account. To get a hold of me, I would suggest just emailing me at ir@oceanagold.com. That would be the best way to get a hold of me or someone from the team. And yeah, we're happy to talk about different issues. I mean, if it's any of the things we talked about or anything else, we're happy to discuss those as well. Yeah. But I appreciate the opportunity to be on this podcast, Rob. Really good work.
Yeah, no worries. And you brought up quite a lot of important issues here, and I'm sure the audience will take a lot away from that, and hopefully learn something and maybe implement some of the things that we've spoken about into their business and into their day-to-day lives, which really is what this podcast is about. It's educating the audience and the mining community, and hopefully just improving standards across the board. So really appreciate your time. And thank you for listening. And until next time, happy mining.